Greetings and thank you for taking time out to review this training video. Your fiscal management team at the NUL seeks to assist you in your compliance endeavors. Our training today is mandatory viewing for all affiliate fiscal staff that are currently working under grants that fall within the guidelines of the OMB Federal Register. Our discussion today will cover two main areas of concern. This will include one of our most recent DOL audit findings regarding program and administrative expenses. We will discuss the finding and share in detail the steps we are taking to make adjustments in this area. This will include how to split expenses on our monthly reporting and which expenses will fall into certain categories. The next major area is regarding our current expense reporting. We will discuss measures that we are taking to address reporting inaccuracies in our quarterly reporting. This will also include a discussion on current federal requirements and the nature of our current accrual-based reporting system. In conclusion, we will identify the methods we will use to comply with current reporting requirements. Monthly invoice documents that are received as a request for payment are reviewed in order to check for the proper compliance required by our funding sources. By accepting a federal grant, each affiliate agrees to comply with federal funding requirements and acknowledges that every submission is a statement to a government official. Every request for payment is viewed as a certification that the awardee is in compliance with all terms and requirements of such grant. Our invoicing process is designed to create an efficient funding process. Backup documentation for monthly expenses is reviewed in preparation for audits conducted by our funding sources. Each affiliate is responsible for the proper preparation of their monthly invoices, and our goal today is to provide information relative to the standard format required by NUL. The proper presence and format of monthly invoices will ensure a successful compliance with all federal funding sources according to generally accepted accounting principles. Our first topic will address an audit that was recently completed at the National Urban League, which revealed that expenses related to federal grants must show a separation between funds used for program and administrative expenses. The result of this is that NUL must guarantee that these expenses are properly reported. The goal of this finding is to get a true reflection of program-related expenses. This separation is required because administrative costs are shared across programs, while program costs are unique to each funded program. Program versus administrative. The activities of each affiliate and the costs associated with each can be grouped into two categories: program activities and administrative activities, based on the purpose of an activity and its relation to your mission. This is an essential way that nonprofit organizations categorize expenses to present financial statements in accordance with generally accepted accounting principles. Program activities are those services or expenses that carry out the mission and purpose of the organization. This is further identified by the activities necessary for the implementation of each individual grant. Administrative expenses are all activities of nonprofit organizations other than program services. Generally, they include administrative, financial, and management tasks essential to the operation of the organization. For internal purposes of reporting monthly expenses, we should show the costs in each specific category. It is important to note that consistency is the object of financial reporting. For monthly invoices, examples of administrative expenses are as follows: accounting, payroll functions, audits, general ledger functions, services required for administrative functions, equipment, rental purchases, utilities, office supplies, postage, rentals, machines, administrative travel, costs of information systems, and personnel who perform administrative functions. Be sure to contact your fiscal manager for questions regarding the categorization of particular expenses. This separation of expenses will require an additional section on the monthly reporting template. Expenses for each area are shown in each column and calculated accordingly. We will correspond with each affiliate to make changes to your monthly invoice template for monthly monitoring purposes. In summary, we are obligated to report expenses according to federal guidelines with nonprofit organizations. Our understanding of the Federal Register will allow complete compliance in this area. We must take precautions to categorize each affiliate expense correctly. While some allocations may not feel 100% accurate according to the description, the key is to consistently use the same allocation of particular expenses from month to month. The second major financial area that we will address today is in the area of expense accruals. We will address this area by providing quarterly accrual reports for each affiliate. What are accruals? There are two major types of reporting methods, cash-based and accrual-based. Cash-based, expenses are recorded when the cash is paid out. Accrual-based, expenses are reported in the period when they occur, which is often a different period from when the payment is made. Federal grants require accrual-based accounting. The accrual basis of accounting also provides a better picture of a company's expenses at a moment or point in time. The reason is that all expenses that were incurred will be reported. The matching principle is one of the basic underlying guidelines in accounting. The matching principle directs a company to report an expense in the same period as the related program outcomes. Why accrual reporting? It is required for all federal programs. 2. It provides more reliable data. 3. Cash-based method will understate the true spending for a particular period. And 4. Failure to report on an accrual basis may result in a loss of funds. Accrual examples: salaries of employees paid in the next month. Contractual expenses incurred, not yet paid. Travel: rental equipment costs utilized but not yet paid. Here is a sample of the section that you will use to report your accrual totals for each quarter. The section above is added to the bottom section of your monthly invoice cover sheet. This will include invoices submitted for the months of March, June, September, and December. Your fiscal manager at NUL will also work with you to implement these changes to your invoice template. Our first month of accrual reporting is March 2015. During this month, each affiliate will provide accrual information to NUL for reporting. Improper invoice packages will result in delayed funding, difficult audit processes, denied expenses, audit flags, and may hinder future requests for funding. To summarize today's urgent topics, we reviewed two fiscal areas. The first was in relation to the separation of program and administrative expenses. We provided categories and made a demonstration of how to split these expenses on your monthly invoice cover sheets. The second area addressed was the calculation of quarterly accrued expenses and how to report these unpaid expenses on your monthly expense cover sheets. We are looking forward to a successful implementation of these agenda items. Contact your fiscal manager by phone or email for questions regarding these updates to your programs. These reporting changes are mandatory and we must demonstrate full implementation. Please email the above viewing code to your fiscal manager to confirm that a member of your organization has viewed and is aware of these urgent reporting changes. Thank you for your time today, and we are looking forward to serving you with your fiscal compliance needs.